Today we're diving into the heart of the Indian stock market, which is corporate earnings. These earnings are like the pulse of the market, dictating its direction and also reflecting the overall health of the economy. So let's zoom in on the Nifty 50 companies and see how they performed. In the third quarter of fiscal year 24, the Nifty 50 companies saw revenue growth of 9.2%, which is a slight uptick from the previous quarter growth of 8%. Now, looking at the bottom line, the growth in profit after tax stood at around 14.7%, which though slightly is lower than the previous quarter's 20.3%, still reflects a healthy performance. During this period, banks took a lead in revenue growth and their business expansion remained robust, although earnings saw a dip due to moderate growth in non-interest income. Now, one sector that really shines on both revenue and earning performance is automobiles. Now, we're talking about an 85% growth in profit after tax, coupled with a 16% increase in total income year over year. This robust performance is driven by a combination of factors like the decline in commodity prices, easing of the semiconductor crisis, along with an improvement in demand. Now, on the flip side, the IT sector has been experiencing a rather expected trend of subdued revenue growth. Now, this performance is largely in line with market expectations and is on the back of weak macroeconomic conditions. Now, with continued weakness in key verticals and geographies, many companies in the sector have revised their revenue guidance downwards. Now, coming to infrastructure, the government's focus on investing in infrastructure projects has created a favorable environment for companies operating in the sector. Now, this has driven their profitability upwards. In the pharmaceutical sector, the latest quarter showed strong trends in both profitability and revenue growth. Now, this was primarily driven by several factors, including a reduction in pricing pressures, lower raw material costs, and favorable crude oil prices. Now, these factors have collectively contributed to the sector's revenue growth and improved profitability. Lastly, the FMCG sector faced challenges with lower revenue and net profit growth, primarily due to sluggish rural demand. Overall, the Q3 fiscal year 24 earnings ended on expected lines, with autos and financials playing a significant role. However, it's worth mentioning that some sectors are still facing challenges. For example, the IT sector saw overall earnings experiencing a decline, which shows the challenges faced by industry due to global uncertainty. If you want us to do an in-depth analysis of any of these sectors, do let us know. Having said that, this is me, Merlin signing off. Take care and stay invested.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com